The price of Bitcoin has slipped 10% in 2 days to fall below the 32,000 level for the first time since January 11th. The total market value of all cryptocurrencies shed more than 100 billion in the last 48 hours. The plunge comes after U.S. Treasury Secretary Janet Yellen warned about the illicit use of cryptocurrencies. Here to talk about the moves in Bitcoin that we're seeing is Anthony Pompliano. He's the founder of Pomp Investments and the writer of the Pomp Letter. Anthony, aka Pomp, welcome back. Good to see you.
Absolutely. Thanks so much for having me.
So let's get, your reaction. Obviously, you got skin in the game. You love Bitcoin. How do you stomach the volatility and swings like we're seeing on days like today?
I don't look. I literally before we got on and you said, hey, we're going to talk about the price drop. I literally just had to go look and see where the price was. And I was surprised to see it at 31,000 because I just don't pay attention. Like, it doesn't matter. The day-to-day price swings to me are, if you're a trader, super important. But if you are somebody who's holding for, years, if not decades, then it frankly just doesn't matter. And so I fall in that latter bucket and just don't look.
I want to focus in on the Janet Yellen part because I've been covering this for a while now. And, we covered how HSBC said they wouldn't be accepting payments in Bitcoin anymore or taking transactions in cryptocurrencies. We saw the FCA coming out warning against the dangers of Bitcoin, then ECB's Lagarde, now Janet Yellen jumping in here saying that it's used for, terrorist activity. How much does this concern you? Because it seems like there's a domino effect happening here, Pomp.
So first, I love Janet Yellen. I hope that Janet Yellen becomes a Treasury Secretary. She's been nominated. That would be fantastic. Janet Yellen is a big fan of devaluing the dollar and using it to address unemployment. We've got high unemployment. And so therefore, my expectation, both from the incoming administration and from Janet Yellen taking over as Treasury Secretary, is that we'll continue to see a lot of monetary and fiscal stimulus. And that ends up being great for investors who are long investable assets. And so I tend to think that that is a net positive for Bitcoin and for other assets as well. When it comes to this narrative around kind of criminals or nefarious use of cryptocurrencies, there are now studies that have come out and shown that 0.4% or less, 40 basis points or less of Bitcoin transactions are used for nefarious purposes. If you compare that with the US dollar transactions, over $2 trillion a year is laundered in US dollars. And the biggest perpetrators of this money laundering are the large banks. And so if we want to start talking about, hey, we should start addressing money laundering, terrorist financing, drug dealing, criminal activity, we better start looking at the US dollar. And frankly, it is comical that right now we have regulators that are trying to build a narrative that shows that Bitcoin is used for illicit purposes, but they don't talk about the fiat currencies being used for that same purpose. And so I think that ultimately where this gets to is not only is it factually inaccurate, right, is provably inaccurate what they are saying, is even if they continue to kind of perpetuate this narrative and there is to be some sort of ban or aggressive government action, what we've seen in countries like Pakistan, where they've actually outlawed, they've banned buying, selling, or mining Bitcoin, yet adoption continues to go through the roof to the point where now local government inside of Pakistan is capitulating and saying, we are going to use government funds to actually mine Bitcoin. And so I think that what people have to understand here is, one, not only is the narrative inaccurate, two, it's incredibly misleading because they don't talk about the fact that $2 trillion, literally 2x the entire crypto market cap, is laundered in fiat currencies. But on top of that, it doesn't matter. Even if they come after it, people will still adopt it. And we're seeing that in other countries happen today.
Yeah, so on that point, I absolutely agree. Of course, fiat currencies, have been used, since forever for illegal activities. But when I saw that chart showing that Bitcoin is used for whatever, less than 0.3% of illegal activities, the first thing that came to my mind was, well, how do we know that? Like, if illegal activities are taking place, how are they even documenting that?
Well, I think that there's a key piece to that data point, which is it was over 2% the year before. So it dropped from 2% to under 0.4%. So literally it went down over 75%. And that's because of, I think, two competing yet complementary things. One is you're seeing that criminals are becoming much more educated on the fact that law enforcement can use a public ledger. Literally every single transaction is put on a public ledger. If you're a criminal and you want to basically broadcast to the world, I sent money from X location to Y location, you should go use a blockchain. And that's what's happening. And so obviously, as criminals become much more educated on the fact that it's very easy to trace this stuff, they're using it less and less for nefarious purposes, and they're going back to physical cash. The second thing that's important here is there's also been a drastic increase in the capabilities of a bunch of these analytics or kind of law enforcement enablement firms. So companies like Elementis and Chain Analysis are basically now having greater and greater capabilities to better identify who the nefarious actors are and who's using these assets for nefarious purposes. And so when you get better educated criminals that now understand like this isn't the best thing to use to actually conduct bad activity, and also you're increasing the capabilities of law enforcement in order of actually tracking this stuff down, you get a drop in the use of cryptocurrencies for illicit purposes. And so again, just all of the facts run completely counter to the narrative that is being shared by a lot of these regulators. And it's simply just because they're scared and they of the unknown, or two, they're just not informed. They haven't done the work yet. My guess is if they go and they do the work and they start to understand the data, they're actually going to change their tune, and they're going to say, we want everyone to use cryptocurrency. We want everyone to put all of their transactions on a public ledger because it makes it easier for us to do our job. And so that will lead to a rise in privacy-centric technologies, but that'll be down the road.
Or they see Bitcoin as a major threat.
Look, again, any currency that ends up being created that has sound money principles is going to become attractive to these citizens when you are printing unlimited amount of money. And we've seen that throughout history, right? Real estate, gold, Bitcoin, all this stuff. And so the difference here is that you've got a digital application of sound money principles. And I don't look at it necessarily as a threat. I actually think what's going to end up happening here is just like individuals have educated themselves over the last decade, and they've chosen to move some portion of their fiat denominated wealth into digitally sound money, right, in Bitcoin. On that balance sheet, you're now starting to see financial institutions do it. So now Wall Street firms are saying, wait a second, maybe we shouldn't have a 100% dollar denominated or fiat denominated balance sheet. Maybe we should actually go and get some exposure to this. You're starting to see corporations do it. You've got MicroStrategy, you've got Square, there's others that are coming. And so all of a sudden, what do you think? The trend stops after individuals, corporations, and financial institutions? No. Eventually, central banks are going to put this into their reserves. And what's going to happen is it's going to take one forward-thinking, innovative government to go ahead and say, our central bank is now going to include Bitcoin in its reserves. And then there will be this global FOMO that kind of kicks off where every central bank goes to do it. Central banks are some of the largest holders of gold in the world. And so they already hold the analog application of sound money principles. And it's going to be a natural evolution that they eventually hold the digital application of sound money principles as well.
Okay, there's a lot of good stuff in what you said, because I know in past interviews you've said you see Bitcoin becoming the global reserve currency of the world. So despite authorities seeing or afraid of Bitcoin right now, you're saying the revolution is just too strong to stop it.
I don't know necessarily if it's even a revolution, right? I think some people like to position it that way, but the way that I look at this is every economy has a local currency. So if you think of the US economy, we have a US currency, and you go around the world, that's true, whether it's China, Europe, et cetera, is every economy has a native currency. Well, the digital economy is not tied to a geographic location, but the digital economy is a new economy, and that does not have a native currency. Now it does. Bitcoin is the native currency of the digital economy. And so what ends up happening is that the purveyors of the analog economies, the central banks, the regulators, all of those folks, they will have full control, as they do, over the regulation, the laws, and the currency in the analog world. So they still have, if you are a business and you are domiciled in the United States, you still have to get your money transmitter license, your broker dealer license. You still have to abide by the CFTC, the SEC, the OCC, et cetera. You still have to play by all the same rules because you are a business that is domiciled inside of the analog geographic boundaries of the United States. But what happens when all of a sudden there are things that are created in the digital economy that have no ownership? How do you regulate a decentralized protocol? You can't. There is no framework. There is no entity that owns it. There's no individual that owns it. It is fully decentralized. And so what we are going through is a paradigm shift where the analog organizations and individuals still have control in the analog and geographic world. But what we are about to see is this rise of the digital economy. It now has a native digital currency, which is Bitcoin. And on top of that, where we are going to get kind of rules and regulation is going to be, there's going to be rules and regulations on the analog companies, the centralized organizations that deal in this stuff, but the decentralized protocols or organizations are going to live through code. And so I think that that's just a paradigm shift that people are going to have to get comfortable with. And it's similar to, go back when the internet kind of had the rise in e-commerce. We used to have sales tax, and it was really clear where people got taxed because you literally walked into a physical store and you transacted in the store. Well, now when I buy something on the internet, where's the sales tax paid? Or is there no sales tax? How do you deal with that, right? There had to be an evolution of the rules. And so I think that's what we're going through here. And I think of it less as a threat. I think of it more as an evolution. And I actually think that central bankers will eventually kind of get themselves educated. So will regulators, and they will evolve their rules and regulations to address this new world. And so it'll be a net positive for production in the world. It'll be a net positive for the individual. Anyone in the world with an internet connection can now participate in the global financial system. And I also think that regulators will eventually figure out how to do this in a way that satisfies them, but also empowers the innovation.
Anthony, you mentioned it's on just one more thing on the topic of central banks, because this is one point I often hear from the gold community is, yes, central banks own gold, right? You say they'll eventually get there, but why haven't they looked to Bitcoin yet as a store of as wealth preservation here and adding it to their coffers? Why haven't they done it yet?
Yeah, I mean, you have to remember this is a really small asset class still, right? I mean, Bitcoin is only a $700 billion asset. And so if you start to really look around the world, what you're going to see is you're going to see the nefarious governments do it first. And they're already starting to play this game. So what you see is countries that have sanctions based on that US dollar denominated system, like Venezuela, like Iran, like North Korea, they say, oh, wait a second, there's a decentralized digital system that I can participate in that no one can censor me on. Of course, they're going to go look there. And so not only are they saying we want to transact in it, right? They're also saying we want to mine it and we want to use this to have our citizens pay us and we want to pay other countries in this digital decentralized currency. Now, just like every technology in the world, whether it was beepers, cell phones, the internet, anything, the bad actors always adopt it first because they're playing a cat and mouse game with law enforcement or with kind of the good guys. And so same thing's going to happen here. So you're going to have the nefarious countries or the bad actors. They're going to use it first, and eventually every other country will use it as well. It just is a foregone conclusion that everyone is going to eventually kind of coalesce around the thing that they can guarantee with 100% certainty that no one else is manipulating. The problem, and we saw it for the last 4 years with President Trump's administration, right, was the relative devaluation of currencies and the constant battle. Who was devaluing more? Who was manipulating their currency or their economy more? Now, all of a sudden, there is a currency that no one controls, and everyone knows with 100% certainty that is provable how scarce it is and what the monetary policy is. And it's on display every day for auditability. And so I think that that's where central banks eventually are going to realize humans are really good at monetary policy until machines get involved. Just like many things, machines are better at doing things than humans. We are a machine. We just happen to have a lot of bias, fear, greed, emotion, etc. And so when you get into this programmatic monetary policy world, what ends up happening is having an immutable record of all transactions and having that programmatic monetary policy is superior. And then when you add in the fact that the legacy fiat currencies are being devalued at such a scary rate, it's no wonder that citizens, corporations, and financial institutions are all racing to go find how do they protect their wealth. And Bitcoin is the recipient and the beneficiary of that global surge.
Well, on that note, I want to get your thoughts on the other big news item for Bitcoin this week. BlackRock authorizing 2 of its funds to invest in Bitcoin futures. This was according to filings from the SEC. The move allows exposure to cryptocurrency for clients of the world's largest asset manager for the first time. How significant is this news?
Yeah, look, if you think Wall Street's going to sit by and watch everyone else, quote unquote, get rich, there's no way that's happening. And so every single institution on Wall Street has now realized that Bitcoin has gone from a contrarian idea to a consensus idea. They're all doing something, whether they want to just buy Bitcoin and hold it long, whether they want to trade it, whether they want to market make, whether they want to invest in companies or in the infrastructure around the asset, they're all doing something. And it's because the writing is on the wall. The future global financial system is going to be digital. It is going to be decentralized. And the people who go and figure out how to get involved early will be beneficiaries. just like the people who realize if I use the internet and I use a computer to conduct my financial transactions, I have an advantage over those who are not doing it yet. The same thing is happening now. The people who realize if I use the digital decentralized version, I can actually invest in the same exact asset. And I can usually do it in a transaction with the same counterparty. I'm just now buying a stock, bond, currency, or commodity in a digital format rather than electronic CUSIP format. And so the people who are there early will get the beneficiary of that kind of outsized performance. Eventually that will get commoditized down. Just like in the move from the analog world to the kind of an electronic CUSIP world, same thing, move from electronic CUSIP world to a digital world. And so BlackRock's realizing that, so is everybody else on Wall Street. And as I keep saying is Bitcoiners don't want to sell their Bitcoin, but the institutions want Bitcoin. And so the US dollar price has to appreciate in order to accommodate everyone.
I like how you've described Bitcoin as the ultimate financial apex predator. You use your platform to dispel a lot of myths and things that get under your skin that circulate surrounding Bitcoin, so a lot of FUD out there. What are some of the top 3 that really get under your skin? I know the Tether one bothers you, but what do you think are the biggest, rumors or just myths surrounding Bitcoin right now?
Yeah, so nothing gets under my skin. I'm super chill. Like I kind of have gotten to the point where, look, I will continue to educate people on this stuff. I will continue to have, probably more skin in the game than almost anybody I know. And I believe that this is what's going to happen. I'm willing to be wrong in public about it. I'm also willing to have my mind changed if the information changes. But so far, not only has my conviction not changed, my conviction has deepened in what I've been talking about for the last couple of years. And so what I think is, really kind of frustrating to some people is when folks that have large platforms or in positions of power or influence start to discuss things that they just haven't spent the time to educate themselves on, right? So when people start to say it's a Ponzi scheme, well, if you look at the definition of a Ponzi scheme, like there's just no correction, no correlation whatsoever to Bitcoin. And so that's almost a sign to me that somebody just hasn't spent the time and isn't educated. Now, there's 2 ways to respond when people have these kind of misconceptions or misinformed. One, we can sit and we can ridicule, mock, and basically make fun of these people and say, hey, you're stupid. You don't know what you're talking about. Have fun staying poor, kind of all the memes that fly around on Twitter and Reddit. Or we can do the exact opposite. And what I try to do is I basically reach out to the person and say, hey, listen, I saw that you said this. I disagree with it. I think that I can share some information with you that may change your mind. Are you open to a conversation? And again, not everyone takes me up on it, but what I try to do is just say, look, I'm here to have a rational conversation, right? I'm not here to be kind of a Luddite when it comes to this is the only way. And regardless of how the information changes, I'll never change my mind. Like I just have blind belief.
To the Citadel.
Instead, it's on a very frequent basis, I evaluate the market, I evaluate the asset, I evaluate the alternatives, and I evaluate all of the players in the market, and I continue to have conviction here. Here's why. You may agree with me, you may not, but I think having a rational, welcoming conversation to the people who are uninformed is actually the best way to kind of accelerate all of this rather than kind of ridicule and mock folks. Now, if you're just a kind of a bad actor in the sense of like, that what you're saying is wrong and you're still saying it because you're looking for attention, I'll be right there with everybody else with all the memes and gifs and jokes and stuff like that. But there's very, very few of those people. And those people are less investors. They're more entertainers and they kind of know what they're signing up for. But for the most part, I think just being accepting of people, especially people who are open to learning more and trying to kind of wrap their head around this is the best way that we can accelerate everything.
I'm going to throw one at you, then we can wrap with this. Bitcoin is a massive bubble. That's probably the most prevalent one out there right now. What do you see to those people?
Yeah, again, right. It's one of these funny things where, okay, maybe, but if that's true, then eventually the bubble will pop and it will go to zero. Okay, well, I will have so much skin in the game that if that happens, that would be really bad for me. I don't believe that's going to happen, but my opinion doesn't matter. And neither does whoever says that the Bitcoin market is a bubble. Like ultimately, nobody's individual opinion matters. It's what the market believes. And so far, every data point we have suggests that Bitcoin is not only not a bubble, but that actually Bitcoin is being adopted at the fastest rate that we've seen of almost any asset in history. And therefore, from a price standpoint, it has been the best performing asset of the last decade. And so anytime that you get such an asymmetric opportunity where literally there's a low probability of something working, But if it does work, there is massive payoff of value and value accrual to that asset. That's somewhere that I want to be involved. And so Bitcoin to me is like the ultimate asset where that manifests itself. And so that's kind of how I think about it. It's like, sure, there's plenty of people who think it's a bubble, it's a Ponzi scheme, it's, you know, whatever else. But if that's true, the market will determine that and it will go to zero. But if you believe that, then you should short it. Like you should short Bitcoin. If you think it's a bubble and it's going to zero and you really truly believe that, short it. But what I end up finding out is most people who say that, they don't actually believe what they're saying. Their portfolio doesn't match their words. And therefore, you know, you always got to kind of take it with a grain of salt. And as Nassim Taleb says, don't tell me what you believe, just show me your portfolio. And, you know, mine speaks for itself. And any detractors, I'm happy to see them shorting Bitcoin and see what happens.
Last thought, I swear, on a scale of 1 to there is no top, I've heard that. Where does Pomp fall in terms of Bitcoin forecasts this year?
Yeah. So the forecasts are always weird, right? Like in order to have a true prediction, you have to one, predict price and also timeline. I am less and less of a fan of predicting things as I get older. But in 2019, I wrote a piece that said, I believe that Bitcoin was going to go from, it was around $10,000 at the time to $100,000 by the end of 2021. So by the end of this year, hit $100,000. I said that, you know, now almost 2 years ago. I still believe that. I haven't changed it. Somehow I'm now the most conservative guy in the room because now there's people saying, you know, 200, 250, 300, 500, you know, whatever the numbers are. I'm just going to stick with 100K. You know, I kind of did the work. Nothing's changed. I still believe we'll at least hit that. So I'll stick there. When we look out over a very, very long time horizon. So if you give me the benefit of the doubt and say, hey, don't put a time prediction on it, just tell me kind of where the value of this thing goes. I absolutely think at some point in my lifetime, we'll see $1 million Bitcoin price, but I don't know if that necessarily has more to do with like Bitcoin value accrual as much as like the devaluation of the dollar, and just over a long period of time, everything, you know, goes up in dollar prices from real estate, stocks, precious metals, et cetera. But I just think it's a foregone conclusion. You just got to be able to stomach tons and tons of volatility, literally, you know, 50% drop in a day, 80% drawdowns over a year. And then also hundreds of percent of appreciation in, you know, just a couple of months. Like all of that volatility scares a lot of people. But if you're a long-term holder, you kind of do your research and you get comfortable with it, then I think that it could be a pretty amazing thing to put in a portfolio.
Pomp, I appreciate your time today. This was a fantastic conversation. Thank you for coming on, and happy investing. I wish you all the best.
Absolutely. Thanks for coming on, or thanks for letting me come on and rant for a little bit.
Absolutely. You're welcome anytime. And thank you for watching. We'll have much more for you on Stansberry Research. In the meantime, follow us on all our social media platforms. Thanks for watching. I'm Daniela Cambone.